Turkish President Recep Tayyip Erdogan has launched a slew of reforms to attract more investment to the country and boost foreign exchange reserves. The Lira surged as much as 3% after the announcement. Under the program, the government will facilitate businesses in technology and other emerging sectors to create more jobs for skilled workers. Ankara will offer special incentives to international investors for ongoing and greenfield projects. And President Erdogan says structural reforms will reduce costs and boost returns for Turkish businesses.
We are building a growth structure which creates qualified employment, does not cause inflation and current account deficit. It is financed mainly by domestic savings and direct international investments.
Well, for more on this story, let's speak to Erhan Aslanoglu in Istanbul. He is an economist and the Vice Rector of Piri Reis University in Istanbul. Welcome back to the program, sir. Now, as we heard there, President Erdogan has really sought to reassure both domestic and international investors with his promise to restore confidence back in the Turkish economy. Certainly, we saw the Lira rally in response to those comments. What's your take on what the president is reforming? Do you think these reforms will actually work?
Thank you very much. Yes, I think we can look at the two sides of the story. One is to focus on the reforms, and the other one is a significant shift in the policy framework of the Turkish economy for the next coming months, I think. What we have seen since Saturday morning would be historical in terms of economy and politics of Turkey, I think, because the focus, the messages from the top governors and today from the president was on inflation, first of all. What I think that the priority for the short term in the next coming period, for the short term period, will be on inflation rather than the growth. So if the priority is inflation, we should think about the monetary policy and we should expect more tough, more tight monetary policy. That means Turkish lira will be more attractive. And that's what makes Turkish lira appreciated today. That's important because Turkish lira or the depreciation of Turkish lira is the main reason for the Turkish inflation. What the markets pick up from this point is that Turkish lira will depreciate a little bit and the pressure on inflation will go down, and market-friendly policies for financial markets will be implemented. So that will be the main point for the stabilization in the market, I think. And for the medium and long term, as you said, more reforms are mentioned in the remarks in the talks of the president.
Let's talk about the issue of monetary policy, and of course one big aspect to that is interest rates and how they're set. We now have a new central bank governor in Turkey, in Naci Akbal. He's due to convene the Monetary Policy Committee on November the 19th of this month. Do you expect interest rates will go higher when this new governor chairs this meeting? Because as we know, economists see there is quite a direct link between high interest rates and lower inflation.
Yes, exactly. I'm expecting a significant rise in the interest rates next week in the next move of the central bank, Turkish central bank. Because so far in the last 9 or 10 months, central bank tried to implement the policy using some indirect channels. But unfortunately, due to high inflation or rising in inflation in Turkey, interest rates in the market started to go down. So central bank needs to move in a more proactive way rather than the reactive way. So the messages of the governors and the governor of the central bank in the Monday morning was focusing on this point, and I expect a significant move by the central bank next week. What I'm expecting is that 400 to 500 basis points rise in the next meeting of the Turkish central bank, because now the market interest rates are fluctuating around this level. So I think central bank will aim to move a little bit ahead of the markets and give a strong message for the appreciation of Turkish lira and to fight with inflation.
Interesting, and we should point out what the current one-week repo rate is, and that's 10.25%. And before we let you go, Erhan, in terms of the coronavirus pandemic and the effect on the Turkish economy, do you think the economy is actually managing to weather that successfully right now?
We have seen in the third quarter of the year, due to rising credits in Turkey, the third quarter growth rate is likely to be very high, 5 to 7% maybe. But due to rising in interest rates and also voluntarily or with some social distancing measures, the demand for special services and for many goods is likely to go down in the next coming weeks and months. So fourth quarter growth rate would be around 0%. But I think in the first quarter of the next year, we might have faced another negative growth rate. But if the vaccine and other expectations related with the COVID-19 realizes, and if we have a better future in the second or third quarter of the next year, Turkish economy is likely to move to growth line again in the second half of the next year. But next coming months seems to be low growth. But compared to world averages, OECD averages, the growth rate of Turkish economy seems to be a little bit better than its peers.
Okay, and we will be keeping a close eye on the Turkish Central Bank's next meeting next week. Thank you so much again, Erhan Aslanoglu.
Thank you very much.
Istanbul.
Thank you.